This might actually be the most important live stream I've ever done. I had an epiphany last night that we're going to get into here in the stream here. I'm going to build out a case that the way audits are done is going to radically change in the next few years. And I'll show you exactly why that is, why it's important, and what you need to be doing about it. IRS. The IRS is the devil, right? If you talk to people who work at the IRS, a lot of them are true believers. They think if it wasn't for them, the republic would not have any revenue and the government could not function. Now, let's put to the side the fact that we didn't have an income tax until 1913. But people, like I said, a lot of them are true believers. And so, knowing that, we have to deal with them as such. So, over the last couple of years, since 2018, there has been a major shift going on in the technology employed by the IRS. And fundamentally, Palantir, the company named after the surveillance device in Lord of the Rings used by the bad guys, they decided to name their company this. So Palantir built the plumbing for this. Aura, which is AUR plus DDB plus SRA, and we'll get into what all those mean, is the engine. And it has been quietly running since 2018 on the bottom of the income scale. And then the LPC model, which is about large partnerships, model proved that the pattern works on the top. And the tax gap, and the gap is the difference between what the IRS thinks it should have been paid and what was actually paid, forces the rollout to the middle. And that's what matters for all the rest of us. The biggest trap in all this is the default assessment statute. And the one protection that we have is the Constitution. Over the next few minutes, and usually I keep these to 30 minutes. I will probably go long on this one because it's a lot to talk about. But over the next few minutes, I will go through the technology that currently exists and what is coming and what to do about it. Because if the IRS were a company, this would be rolled out within the next 18 months. But because it's a government agency, it's going to be slower, and we can thank our stars for that. But fundamentally, it's going to go quickly. And I would say within 5 years, this will be the reality of what I'm going to show you here. All right. Algorithmic inevitability, the operational reality of AI tax enforcement. This is stuff that is already in play, and it's important to understand what's going on here. So let's just jump into it. So there is a layer by layer stack that is developing in the IRS. So the deepest layer is the data. And I don't know if you guys have heard about this whole AI thing, but data analysis and pattern recognition is what it's really good at. And so since 2018, there have been a number of Palantir contracts between the government and Palantir for IRS processes. And they've taken a couple different forms. They started with a $99 million contract, and it's grown to $200 million for this foundation mega API. And this is the synthesizing all the different data streams that come into the IRS and then creating a cohesive level of analysis. The next layer is the Aura stack, and this is the processing. So Aura is automated underreporting and assessment, I believe is what it stands for. It's composed of a couple different systems, and this is the second wave of machine learning, where it's taking the data from layer one and then processing it and trying to find patterns. And then layer three is what is not really here yet, and that's what is coming in these next couple of years. And this is going to be the execution of audit selection and automated processes with escalation to humans, which is our one saving grace, like I said. So that's the thing that's layer one exists. Layer two is being built currently. Layer three is coming. That's where we are. And I think it's inevitable just because of the way the IRS views things through the tax gap. They release a report every few years called the tax gap report. And basically, the findings have been fairly consistent. So what happens is you go through a tax year, everybody files tax returns, and then there's an audit cycle, which takes about 2 or 3 years. And then once the audit cycle closes, the IRS looks at their audit results and they say, okay, based on our findings and the adjustments that were made in audits, then if we apply this statistical model to everything, then we know, quote unquote, know, we are being shortchanged by the American public to the tune of about 15%. So it's roughly an 85% voluntary compliance rate, which is what they call it. And you know how voluntary it is. If they didn't have the threat of jail times and levies and all these kinds of things is debatable, but that's what they call it. And then so 85% voluntary compliance, and they get another 2%-ish in enforcement, and that leaves 13% of a gap. So that's the money that they think they are being shortchanged on. And if that's what they believe, and they do, then that's what they're going to go after. So before chaos, after order. So the key insight here is that before AI could be deployed on the data, you have to have the data. It has to be unified. And that's what's already been done. Like I said, Palantir has already created this. Before there were 100 different business systems. There were 700 different case selection methods as far as who was selected for audits. And the whole government was running on 60-year-old COBOL code. And there have been attempts over the years to implement what they are actually achieving now. For the past decade or two, it's been the DIF system, DIF. And that was a statistical model that tried to look at things that were out of parameter. And that was crude, but it did send out a bunch of notices. So the fact that we are now have a unified data layer that has been built, this is done, means that the IRS has that much more information with which to do the the audit selection. Right? There's different names for this. There's AUR, DDB, SRA, Fair Isaac model. So there are 2 billion information returns. The different systems in the stack are what is in production already. So automated underreporter. So this is where the, you get a W-2 from somebody. The person who filed that W-2 or the company that filed that W-2 keeps a copy, sends a copy to the recipient, and sends a copy to the IRS and possibly the state. And that's what's the third party matching happens. So if you reported something on your tax return or didn't report something on your tax return that is reported by somebody else, you get a notice called a CP 2000. And in the CP 2000, this is a data mismatch report, which is powered by the automatic underreporter. And they say, hey, you didn't include this. We've done some calculations already, so you owe us whatever, $8,000. And if you look at the fine print on page 2 or page 3, then you can see that if you disagree, you can write a response. This happened just the other day with a client. It wasn't the IRS, it was actually the state. And the state said that the client owed $17,000. And I went through the actual math and went through why they were wrong, and the actual amount due was $170. So it's a $17,000 to $170 difference, which was crazy. And we had to write an 85-page response, which was fun because we had to include supplemental filing information. So AUR exists. It generates 9 million notices every year. That's how many CP 2000s go out. So there's 22 million discrepancies that get flagged. Of the 22 million discrepancies, 9 million notices are sent. Then there's the DDB, the dependent database. This is the first wave AI, hard coding rules and scoring logic, integrated external data from Health and Human Services, from SSA, Social Security, to flag pre-refund anomalies. This is where they're going after, especially people who claim refundable tax credits, mostly for children, and has been a bigger and bigger issue. And the old commissioner of the IRS, back in, I think, 20, was hauled before Congress. And they said, how many people, why are you auditing so many poor people? And his response was, I find, illuminating and hilarious and dystopian. That basically they said, when we audit poor people, they just don't fight back, which is great for us because we just get default judgments, which we'll get to here in a minute. And rich people have professional advice, like guys like me, who create complicated structures. And in order to even understand those structures, we have to have higher trained employees, which are hard to do. It's hard to train those people, and they're hard to keep in the IRS because they can make more money on their own or in the private sector. And so as a result, just the nature of things, if we want to hit our audits, then an effective means not necessarily discovering the truth, but raising revenue for the government, then the poor people getting audited for earned income tax credits is the thing to do. And that's been the status quo. But now we have SRA, the Systems Research and Application. This is the second wave AI that's already been built as machine learning and data mining models predicting audit outcomes and assigning risk scores. And then the final layer that, again, this is in production today, final risk prioritization. So there has been a bunch of news stories over and announcements from the government over the last year or so talking about how they're going after fat cat bigwigs in large partnerships. So that is the implementation of the second wave AI that's already been built, but more is coming. The physics of the audit. It's like any process, it starts with a wide set and then funnels down, right? So 2.8 billion information returns ingested annually, W-2s, 1099s, all different kinds of things. Each one of those forms has multiple pieces of information that have to be processed and understood. 22.3 million discrepancies automatically flagged by the AUR. And then that comes down to 2.9 million returns actively selected for compliance review. That doesn't mean 2.9 million audits, but those are the ones that are then looked at for future audit. And in the old days, this was impossible, just the sheer numbers involved. But in the current AI powered modality, this is possible. And that's the big shift that we're seeing. So for the future, right, what they want to do is they want to narrow the tax gap. And that, again, that's the money they think they are owed by the American public that was not paid. And staffing has been a big issue for the IRS. With the Doge cuts, a lot of people were laid off, a lot of people took early retirement. Congress is talking about slashing their budget even further, which I'm all for. But 2.9 million, those a subset of those become eventual audits is a question in the chat. Yes. So that's the pool from which audits emerge. But it doesn't mean all 2.9 million become audits. It's just for further review. So what does the IRS want to do? What they want to do is they want to hire on enforcement and do more training. And there have been 10 years of inability to maintain adequate staffing. So in the current year, that's not changing. In next year, probably not changing. But in the next administration, probably changing. And they have been focusing more and want to continue to focus more and more on large corporations, partnerships, high income, and high wealth to expand compliance programs in areas such as large corporations and all that kind of stuff. And again, going back to the 2019 testimony, it's hard, right? So if you've got a partnership with $100 million in assets, which is the large partnership things that they've been looking at, by definition, you've got a lot of stuff going on. It's complicated. There's probably real estate. There's probably businesses. There might be tax credits. There might be all these kinds of things. And so it takes sophistication and employee capability to be able to deal with those things, which historically has been the problem, right? They can't find and hire the people to do that work, or they can't keep them if they do. But with AI behind them, they have each individual employee at the IRS has an increased capability. And then the alternative interventions for emerging conditions. This is already going on, and they're investing in modern alternative interventions for emerging issues such as digital assets, listed transactions, etc. A listed transaction is there's a list of types of transactions that you have to give special, further in-depth reporting to the IRS. So, for example, conservation easements or captive insurance programs, things like that. And then as they harness the data and invest in the tools and technology, they can optimize case selection to identify highest risk cases, improve case assignment, and identify emerging compliance issues and ensure fairness. That last one's definitely in quotes. The agency explicitly defines its future state as harness data and invest in tools to identify emerging compliance issues. So this is, in their own words, this is the kind of stuff that they are looking at. Large partnerships. I touched on this briefly before. Pre-AI, 0.3% total audit coverage. And if you expand, so large is typically 100 million and up in terms of assets. If you go down to we have some statistics on 10 million and up. The audit coverage on a partnership with 10 million in assets or higher was 0.1%. The audits took an average of 1.7 years. 80% of them resulted in no change, which means the whole paying that person to work for 1.7 years on this file and however many people were involved and paper and everything was a waste of effort from the perspective of whether this raised revenue or not. A post-LPC model, large partnership compliance, AI analyzes the entire population of large partnerships returns using machine learning. And it can do this because there aren't that many, fundamentally. That capability is improving. 82 high-risk returns flagged instantly up from single digits. So I think it was like 7, and it went to 82. 75 active audits, and 500 soft notices, those automated soft notices, which is actually, I think is going to be the real killer feature of this whole stack, set for balance sheet discrepancies. So yeah, just way more activity in the post-LPC model than was before. Now, whether they get what they want out of it is a different question. But so this is a summary of the tax gap, billion gross gap. So that's what they think IRS, or that's what they think American taxpayers did not pay. And then there was enforcement action that recovered a little bit of it, but that still left 600 billion according to their statistical inferences. 61% of the gap is driven by pass-through entities. Sole proprietorships, and this is why I hate Schedule Cs, by the way. Sole proprietorships, misreporting hovers at 55%. So sole proprietorships are actually the largest element of the tax gap. And fundamentally, this makes some sense because primarily a sole proprietorship, a Schedule C business, is somebody who has a small business and does not have professional assistance in reporting. Because if somebody comes to me and they're making decent money, I'm going to recommend that we shift to a different structure because it's more tax efficient. And so the ones who didn't have that advice and they don't know to ask the questions. And so we're talking about the less sophisticated, more error prone group. And you don't want to be in that group. That's the whole reason I don't like Schedule Cs. All right. So here's the biggest trap. The biggest trap is the automated escalate on response mechanism. And so what happens is in the information processing behind the scenes, all this stuff happens. This whole technology stack is built and is being improved as we speak. And we'll have some kind of trigger, and then a notice goes out. It could be a CP2000, it could be a CP12, it could be a whole number of things. And it looks like a bill, right? If you look at the front page of it, it says it's got a little table and it shows the items and then it has a balance at the bottom of it. That looks like a bill. But if you actually read the whole thing, it's a proposal of a bill. It's we think we are due this money from you, Mr. Taxpayer, Miss Taxpayer. And what happens is, I know this from personal experience, what happens is people get this scary looking letter from the IRS and they stick their head in the sand. So my whole entry into the tax world was getting letters like that in 2007 saying I owed $1.3 million, which was crazy, was not true. And I was panicked. I didn't know anything. I said, that can't be right. And I just ignored it, right? They got more letters and certified mail and then a phone call or two. And then they started garnishing my wages, which went from, I was making peanuts at the time to making peanut crumbs because they took everything except like $200 or something from my paycheck. So the trap is that the absolute majority of taxpayers ignore or miss deadlines or provide insufficient proof, and the proof is the key element. And so the hammer becomes the statutory notice of deficiency under Section 6212 is automatically issued. Assessment becomes legal reality. So you get this letter and it says, we think you might owe this. You either don't respond or you respond poorly or you respond late. And the IRS says, no, you owe it now. And that's it, right? So what happens when that whole system is powered by AI? And this is the realization, the epiphany that I had last night as I was laying there. I was like, they're going to rely on this trap and this hammer for the fact that they don't have to escalate, right? That's the key thing. Unresponsiveness is a feature. IRS data confirms 18.4% of automated discrepancy cases closed without any taxpayer contact. That means somebody went silent. I was one of those. So I'm not criticizing people. I understand, but it's not the way to go. All right. And then in the broader pipeline, 35 to 42%, depending on which notice you're looking at, no response rates are standard. So let's just call it 30. Let's just call it a third, right? The IRS sends out letters. A third get no response, automatic assessment, the end. That's more tax revenue for the IRS. And you got to think, if you're an auditor working for the IRS, the job is not find the most beneficial interpretation for the taxpayer. The job is get audit revenue into the IRS, right? And just like any job in any organization, your job is to do the best job of whatever your boss tells you to do. If you're an auditor, it's do audits and get money. Now here, and then the major change, now that this is all going to be powered by AI, is that in the human audit, the old system, we had random selection and manual classification. That took a lot of work. In the AI world, we have 100% population analysis via relationship graph and machine learning, which is just basically saying AI can process a lot of data. And in the human audit world, it took 1 to 3 years. Typically 2 to 3 was what we saw. And now going forward is going to be near real-time ingestion. Now, there is a lag. Usually it's around August where all the matching happens in the systems because you have to receive all of the information reports, like the W-2s, the 1099s, and everything. And then you have to receive tax returns, and then you have to cross-correlate the two. So there is a bit of a lag, but it's not 3 years anymore. The interaction would be a revenue agent field visit, which was already rare in the past few years. Most The vast majority of audits were correspondence audits, meaning you got a letter in the mail and then you sent responses back by mail. And the algorithmic version is you get an automated CP 2000 or a 2501 or a 162 or a 504 or 501. There's all different ones. And the default state was innocent until proven guilty, which I don't know if you guys have heard that term in terms of legal principles. And the new system is guilty by default assessment upon non-response. So for those 30, 35, 40% of people who don't respond or respond late or whatever, you're guilty by default assessment is the long and the short of it. So administrative law. If you ask me on my interpretation of legal philosophy, administrative law is bullshit. It's literally without rationale or legal standing. However, it is a thing that exists. So it's not like they asked me. So the key element of the AI-powered systems that are here now and the new ones that are coming is that the agency cannot legally just rubber stamp an AI chosen course of action. So there's a State Farm standard offering an explanation that runs counter to evidence is arbitrary and capricious. And that was from a Motor Vehicle Manufacturers Association versus State Farm case. And because of how our legal system is currently structured, and this may change, you don't know, you have the right to redress. So if the IRS sends you a notice and you disagree and you go back and forth about it, these combinations require substantive human involvement. If you make a protest or you disagree and you are in compliance with the protest or contest procedures, meaning that you respond on time with documentation, all these kinds of things, then you have due process. And so that means that there has to be a human being on the other side of that somewhere, and not just AI, which is our saving grace. And that is rooted in the Constitution and how you are entitled to a fair and speedy trial and jury your peers and all those kinds of things, all those Magna Carta type legal principles that we've inherited. So that is the saving grace for people against this whole system. But the ones who don't respond, that 30%, that 35%, whatever the percentage is, the ones who don't respond don't get all this. And that's the whole trap. Last year, there were 9 million CP 2000s created, which is just a huge number. The filter is the taxpayers who actively contest with documentation and or demand appeals or tax court. Very few people go to tax court. Most of it is just contesting with documentation and maybe going back and forth once or twice. And then the ones who do this protesting procedure, then we get to that human top of the funnel. This element of the human being at the top of the funnel, that's the limiter on how much they can actually process through the system. Okay. You want to make sure that you are in the small part of the funnel and not the large part of the funnel through non-action. TIGTA, which is the Treasury Inspector General, found the IRS has not fully integrated feedback loops to refine its models based on exam results. I don't know if you've used AI where you have a conversation and over time it just kind of starts to go off on a weird tangent. That's true with the IRS systems as well. And the way the systems are built without feedback is that things just continue to go off the rails, which is a problem. The GAO, which is the Government Accountability Office, recently identified unintentional algorithmic biases in the dependent database, causing black taxpayers to be audited at 3 to 5 times higher rates for EITC claims. So earned income tax credits. Black taxpayers are facing higher audit rates because of that. When you have flaws in your training data and you have automated default assessments because people stick their head in the sands, you get systemic, rapid scale harm without human checks, which is the current system, by the way. Question in the chat, has there been discussion if this AI accusation is having pushback like red light cameras, i.e. the accuser witnesses must be human to levy a claim of lawbreaking? Yes, there is, but you have to get through the system first, right? That's the trap. That's that non-response trap, where if you're getting that notice from the computer and you don't protest it, then you lose your rights to talk to that human, and that's the issue. Barrett Johnson, former IRS data chief, saying the goal was to try to move the operational audit functions out of the research environment and get into the operational environment closer to real time. The agency is moving to this real-time analysis. Taxpayer defenses that operate on a 12-month batch cycle are mathematically obsolete. And that might be too strong a statement because we do have an annual filing system, but it is significantly faster than it used to be. So losing strategy, batch defense. Winning strategy, always on substantiation. So this was the second part of my epiphany that I had last night, is that the way to, as this audit activity ramps up, as the AI systems get more empowered, because you got to figure it's just a numbers game to them, right? So Imagine we're 5 years in the future, and all these AI systems are, those final couple levels are built. And the system, which is going to be biased and it's going to be have flawed training data and all the usual things that we see with machine learning, are going to be sending out all these notices, right? And a certain percentage of them, a large percentage of them, a third, let's just say, are going to get no response. And then they fall into the trap and then they get the default judgment. And now this is more tax revenue for the government or enforcement revenue, whatever, however you want to classify it. So that is, I think that's actually the goal. And then of the two-thirds that do respond, you're not going to be talking to a person first. And instead, you're going to be talking to the AI first. So you're going to be sending in responses. It's going to be processed by AI. And then your response will either be accepted or it'll be escalated to a human. Okay. And I think the majority of responses will be accepted because the human only has so much capacity. We still have the right to redress the government and you still have the right to due process. So I think just by nature of the the number of people involved, they're still only going to be able to humanly process so many things. And so the key element is to be able to respond, right? So here's the losing strategy. This is what people currently do. And because there's no other choice, they get a response. It's 3 years past the date of whatever the issue was. People are getting audits for 2023 right now, and they get that notice, and then the taxpayer has to scramble to assemble historical records and remember what was the explanation for this thing, and what was I doing then, and who was I with, and what was the business purpose, and all these kinds of things. And it's hard, right? It's very hard. So the result is potentially, at least, a default assessment. A third are just not going to respond at all. They automatically lose. Of the ones that do respond, do they do it in a timely manner, assembling all those records, or do they provide all the records that they need to do in order to substantiate their position? So this, as the volume increases, the winning strategy has to shift. So the winning strategy is going to be always on substantiation. And effectively, what this means is building your own AI technology stack that substantiates everything that you're doing in real time. Ideally, this is what you're supposed to be doing anyway, but it's logistically almost impossible for many people. But with your own AI systems, and this still needs to be built, I'm just saying this is the direction that we need to be heading, both as taxpayers and in the tax advisory world, is that we need to create systems that will automatically create the contemporaneous records that can then be used for when the IRS is asking questions to respond to the IRS AI with your AI. That's basically the winning strategy going forward. And I'm actually workshopping an upgrade to the family management company strategy. And family management companies are great. And this is a way to employ children in a completely tax-free manner. And I figured out a new method with some new provisions from the One Big Beautiful Bill that you could turn your teenager into a $26,000 deduction every year. And part of the upgraded system is going to be an AI powered feedback system that will create contemporaneous records, management and control, directed actions, and all the things that we need to in order to bulletproof this whole strategy from these potential AI audit vectors. And when your AI sends the government's AI the response that it needs in order to substantiate the position, because of the limit on the throughput to escalation, I am pretty confident that the government AI systems will accept the substantiation. So yeah, fighting AI with AI is the way we need to be going. And that's going to be the winning strategy going forward. And what we want to do is we want to think about how can we implement AI substantiation as we go in all things. And if you are only working as a W-2 for somebody else, then your need for this is limited. There are things that people get audited for if they're just employees, and those things are children, filing status, charitable contributions, because all of those things lack counterparty filing. So if you get a W-2, you're reporting a copy, the employer's reporting a copy, both go to the IRS, those get matched. And usually that's fine. Sometimes people forget, like they worked at a place for 3 weeks and then they moved and then they didn't get the W-2 and things like that happen. But by and large, people get their W-2s and people report them accurately. Charity is totally up to you. There is no corresponding report from the charity that you did that charitable contribution. You get a letter, hopefully, and if the IRS were to ask, then you respond with that letter. But that's only for cash and it's only for certain types of goods. But I can tell you how many people come to me and they bring like a blank receipt from Goodwill because they took a bunch of bags of clothes or furniture or whatever to the Goodwill office. Just it was just never filled out. The Goodwill people don't care. They're like, yeah, you fill it out, you can do whatever. And then like, how do you know that the number is right? How do you know that the description is right? All those kinds of things. Those things that lack counterparty filing are the things that are at risk, even if you have a very simple filing situation. I had one client many years ago. This was back when I was working in Florida, and the IRS was questioning the child credits. They didn't believe that these children that he was claiming were his, and he ended up having to go into the local office with his children and say, "These are them. These are their birth certificates. These are the social security numbers. They say I'm their dad." So he ended up winning that, but it was like 2 years of back and forth with this kind of thing. So yeah, you have to have your AI systems prepared to do these responses, and I think that's the major takeaway here. The operational reality: the machine is built, the target is moving from the mega partnerships, that's those 100 million and up kind of things, down to standard pass-throughs and sole props, primarily sole props, which again, you just don't be in that bucket. And the defense is procedural. So you don't want to have to be escalated effectively by the AI systems. You want your AI to fight with their AI and prove your point. And as long as you can do that, you will be able to stay safe. It doesn't mean you won't get that letter in the first place, but it does mean that you will protect yourself as much as possible. And that is the end of my little slideshow here. The takeaway: this is coming. I think within the next 5 years, we will see a major shift in audit volume. They're still limited in terms of people processing. And so you have to respond and you have to do it with substantiation that is automatically generated for you because it's going to be too much and too hard to fight the AI if you don't have an AI on your side. Think about that in terms of what it means for you and your business and your situation, and then start building it. And the AI, whether it's ChatGPT, Gemini, or Claude, or whoever, they're all getting more and more powerful, and then they're becoming cheaper. So the unit cost of intelligence is going way down, which is great. And so start thinking about it. So how far back will they audit with AI is a question in the chat. The IRS only go back 6. So if you've ever heard, "Oh, keep your tax returns for 7 years," it comes from that policy of going back 6. In reality, the IRS goes back 2 to 3 years. So like I said, people are getting audits for 2023 right now because we just closed 2025. So will the AI go back? I don't think so. And I think part of that is the information architecture. I don't think will have been complete until now. And so they won't have the data set on which to operate the machine. So my guess is it's going to be 2025 going forward. So yeah, so that was my epiphany going back to last night as I lay in bed and I think about all of these issues when it comes to the tax world. So one of my priorities going forward is to build systems that are automatically AI enabled for substantiation and documentation purposes. And I already have a really good outline for that of how to do that with family management companies. And we will be working on how to do that with other strategies and everything. That is the upshot. So you're working with out there with as far as your tax situation goes, make sure that you are doing things in a way that when this new reality, the final steps emerge in terms of the compliance volume of things going out there, that you have things done in a way to to help yourself out rather than trying to scramble 3 years after the fact and trying to reconstruct, oh yeah, I was talking to this guy, we were doing about that, we were thinking about putting together a business or whatever the case might be. Because all tax issues come down to facts and circumstances, which is why an accountant's favorite answer is it depends, right? Because it does depend. My favorite example is $100 shows up in a bank account. How is that taxed? And the answer is nobody knows because it depends. It depends on what that $100 represents. Is it a gift? Is it income? Is it revenue? Is it a dividend? Is it your friend paying you back for dinner last night? All of these things have different tax implications. Is it a loan? Is it a repayment of principal? So it's all different things. Have what the tax return is, you're telling the government what the relevant parts were during the year for tax reporting purposes. And when you sign a tax return, you're saying, to the best of my knowledge, this is true and accurate and all this kind of stuff. If you do nothing else, book things on your calendar and have AI note takers attach documents to them. That's the easiest first thing you can do. And there's all kinds of systems for this. I use Google Calendar for everything. Other people use other things. You can, if you're doing Zoom meetings online, there are note takers. Like I use Zoom for all tax Sherpa stuff, and things are all recorded and it's auto AI summarized. If there's a meeting, and then you can correlate that to an event on a calendar, and then you can distill through AI inference what that meeting was about. Then if they question it, then you can say, here's my stuff. Go pound sand. Just do not be the person who doesn't respond. Like I said, back in 2007, I was that person. And that's how I got into the whole tax world in the first place, which was my origin story. So forewarned is forearmed. Absolutely. This is your warning. The clock is starting.